Our next guest says there are better names in retail than the two we just mentioned. Let's find out why from Jan Kniffen, CEO of Rogers Kniffen Worldwide. Rogers, good to see you, sir.
Good to see you again.
Let's talk about Target and why you're not impressed there, and then we'll move to TJX and onward.
Well, Target gave us a -5 comp, and Walmart's probably going to give us a +5 comp tomorrow. So that's a big difference in the performance of two sort of similar companies. Yes, Walmart's much more non-discretionary. Target's more discretionary. Walmart has huge food business. Target's got a small food business. But all in all, they do compete with each other, and Walmart's winning the game, and we're going to see that when they release tomorrow. So I'm just not impressed with what Target's done. The street traded them up because the expectations were so low, but that was a pretty bad sales number.
What does Target need? What does Target, Jan, need to do? I mean, you're into this at a level few people in the world are. What does Target need to do to improve performance and juice the stock?
Well, Target's out of stocks at the shelf level, the stuff that isn't there so you can't buy it, or high at the moment, which means they're still having some kind of inventory problems. So they're getting the inventory levels down, but they're not getting their mix fixed yet. They've got to do that before we're going to be happy with what they're delivering. And so they've had an inventory problem now for almost 2 years, right? And they've been fixing it on a gradual basis, but it's cost them money each time they've been trying to fix it. They're not there yet. Will they eventually get there? Yes. And will the consumer help them some as they become more interested in discretionary goods as opposed to vacations and stuff? Probably. But I think they've got a ways to go, and Walmart's there now.
Let's talk about TJX. Big numbers there, all-time high on the stock. But are you a little lukewarm on it?
Well, I'm a little lukewarm on the space. I say all the time, Walmart, Costco, Home Depot, TJX, some of the best retailers in the world. So TJX is certainly best in class in the space. I worry a lot about that space because it is so overbuilt. Remember, 20 years ago, this was a little bitty business. Now these are huge businesses, and there's not that many people left to take market share from, and they just keep building new stores every day. So I worry about them getting way overstored, and there just not being enough inventory in the world to fill them all on a off-price basis. And so I just don't like the space. But if you're going to bet on one of those, TJX is one of the best ever, and Burlington is the most improved ever.
So let's talk. So TJX, Walmart, Home Depot, and what was the fourth one? I'm sorry.
Costco.
And Costco. Those are your four big hitters in the center of the lineup. Is there a department store that you would nibble at here?
Oh, I'm kind of a fan of Kohl's now that Tom Kingsbury has taken over, and I think he can do for Kohl's what he did for Burlington, which is fix the problems. And I think if you fix the problems at Kohl's, you'll see a benefit to the bottom line, and you'll see people trade the stock up. I also like Macy's because Macy's has reinvented itself, and it's a much better business than it was when we came into the pandemic. So I do think that they'll have a good back half of the year, and I think Kohl's will start to show improvements in the back half and probably show us some numbers in 2024 as they start fixing some of the issues.
What has Macy's done that has caught your eye? I have to say, I like going shopping, and I go into Bloomingdale's, and it is a much better experience, at least in the ones I'm going to in the men's stores there, than it has been historically.
Well, Macy's has done a couple of things, but importantly, what they've done is change the way they buy the merchandise. So now buyers are completely responsible for what they buy. They're not asking for markdown money from the vendors that they buy from. They're running the business much like these off-price guys do. Buy it, live with it, sell it out, mark it down, do whatever you have to do. So you're fully responsible for that process. And they've got a better process of doing it. Remember, Macy's didn't have much inventory problems during the whole pandemic period like everybody else did because they just got better at operating their business. And, they've got new management in place, and they've done a really good job with that. And now they're about to have another change of management, but they have changed the fundamental way that they operate the business on the buying side. And they're also better on the selling side. But mostly this has been fixing the buying operation.
Jan, nobody knows it better than you. Thanks, man. Appreciate it. Jan Kniffen.